What's up everyone, it's Scotty with MoneyVest. In this video I've got two stocks to buy and one stock to trim. Not specifically sell, but one stock to trim. This is a stock that we talked about just a few months ago. This is a stock that's been on our radar for quite some time. A lot of people who benefited from this stock's rally, it's now hitting new all-time highs. So congratulations if you are one of those people who picked up this stock here. And again, I'm going to be going over two stocks that are now coming down to some very attractive levels. And these are companies with a very strong moat, incredibly sticky business model with a very fantastic fundamentals, with high quality businesses, balance sheet, cash flows, revenue, everything is amazing. I've done more dedicated videos on these companies as well. So hope you all enjoy this video and find it helpful. If you do, make sure that you drop a like. I would really appreciate that. And of course, subscribe to the channel if you're just joining us for the first time. And more importantly, I've got brand new news for you guys. First week of July, so July 1st is now the date. We are planning to do an internal beta launch for our MoneyVest platform, and that's going to give you access to some functionality, some of the features and models and calculators so that you can use that and analyze US publicly listed stocks on your own. And this beta launch is going to be available for all the members. So this is going to be an internal launch. And we've got the pricing at a 51% discount. So right now it's half off for anybody who wants to join and get access to the MoneyVest platform in the early days. Give us feedback and we're going to continue to iterate and make changes over time. This is a video that I posted just about a few weeks ago, updating everybody on where we are in the process. Again, if you want to join, there is going to be a 51% off. This is going to be special pricing, which is going to be locked for you forever. Right? So regardless of how high the prices go for us in terms of developers and data fees and everything, you're going to be locked at that monthly rate with 50% off forever. So link's going to be down below, limited spots left. So you can take advantage of that and of course be a part of our project here and continue to give us more updates and more feedback. So link's going to be down below. There's only one sort of tier now. We've kind of bundled everything into one single tier, and you will have access to everything, the entire website, when it's fully finished and developed. So all the additional features are going to be available to you at no additional cost. So also want to mention that May 50, the coupon code for individual courses expires at the end of this month. So take advantage of it while it's still available. So these are the three companies, and I'm going to go over one by one. So the first two are the ones to potentially start looking into them from a buying opportunity standpoint because they're extremely oversold. They're down over 30 to 40% from all-time highs. So basically been cut about a third or more than that. And I'm going to go over the forward valuations. We'll go over my fair value as well, and then go over the technical analysis on where I believe is the strongest area of support and demand for these two companies. And then finally, the third one is going to be the one that has already more than doubled since when we started talking about it. The fair value was in the low 100s for that one. It's now trading at well over $200 per share. And it may be time for us to trim a little bit, although I do believe that that company has the potential to get up to over $1 trillion in the future. I actually did a video on them about a month ago as well. So the first company on the list that is a potential buying opportunity is actually coming down to some very attractive levels is going to be Adobe. Now, Adobe is a very sticky business model. Yes, there's some competition from DaVinci Resolve. There's some competition in this entire space, but Adobe is a very well-established, profitable business that has been doing well all these years. Very consistent growth in revenues and profitability, excellent balance sheet with more cash than debt on the balance sheet as well. And these are some of the numbers. So trading, of course, at 472, down about 32% from all-time highs, almost coming down to an oversold RSI at 38. We've got a very strong support at 437, with my fair value sitting at a nice round number at close to 420. I also want to mention that I do take into account about a 10% margin of safety. So if you do not include for a 10% margin of safety, of course, my fair value would be a little bit higher because I'm already going off of very conservative expectations. And right now, as it stands, based on today's prices, the forward price to earnings multiple is 26. Price to sales at under 10, and price to free cash flow of 32. Trust me when I say this, Adobe very rarely trades at these prices, at these valuations, especially when you consider how strong the business is. And again, this is going to be the technical analysis where the price is coming down from its highs of 640. It's fallen over 27% and coming down to a very attractive support inside this green rectangle in the 420s, all the way down in the 300s. The perfect pricing would, of course, be sub $300. That would be ideal because that's where it was back in October of 2022 and since rallied over 133%. But this right here is also a pretty decent drop here in the price. Valuations coming down. Again, excellent fundamentals with regards to how well the revenue and the profitability and the margins are. And the balance sheet also having more cash than debt on the balance sheet as well. So negative $2.7 billion of negative net debt as of the first quarter 2024. So that's going to be the first stock on the list to potentially buy. And we can also wait a little bit. Again, 9-10% lower. We're going to be in the 440s, 430s. And that's when we can start looking into this as a potential new position with an oversold RSI, MACD, and the L3 banker oscillator as well. So definitely keep this one on your watch list. The next one on the list is, if I didn't give anything away, is going to be Lululemon. And this is another stock that I did a video on recently. I think the recent resignation from their chief of product definitely has thrown the stock under a lot of pressure. And as a result, it continues to slide lower. It's been selling off. They've got earnings coming up. And I do believe that I think they are going to flourish during those earnings. I think the earnings are going to continue to be strong. Yes, there are some macro headwinds that they are dealing with at the moment in their own industry. But I believe that it's a really, really overdone move. It's very oversold, coming down to some very attractive areas of demand at 279 to as low as 250s. And that's exactly what I've marked as a very strong support. Incredibly oversold RSI at over 26. We got down over 42% for this stock. Fair values in the 250s, 260s, kind of like in that range considering my conservative estimates. And now it's trading at over forward price earnings multiple of 21. I remember Lululemon when it was trading at over 40. So it's really just come down significantly from a price earnings perspective, under 4 times sales and just under 24 times cash flow. So really, really attractive valuations here for this high quality business, which continues to perform. And again, they've got the power of 3 goal where they want to double revenues and cash flows and profitability by 2026. So that is still intact. We'll listen in on the earnings call and see what the CEO has to say. But again, very oversold, coming down to very attractive levels. So keep this one on your radar as well. Again, inside this green rectangle would be a pretty good opportunity to start a new position or even dollar cost average if you believe in the long term for Lululemon. Now, the company that I believe, I think it's time for us to maybe look into trimming this one, or if you want to rebalance, I think it's reasonable to say that it's kind of had a very strong rally, and I think it's fair to say that taking some off the table, considering how overbought this stock is normal, and that would be Qualcomm. I did a video on Qualcomm several times. I think in my past I've talked about $100 being the fair value for this business, and take a look at this. I mean, this is just absolutely incredible how well this stock has rallied since that $100 fair value. So it was trading in the low 100s. And since then, of course, it's more than doubled, rallying over 110%. Just straight up to the moon, of course, along with all the other semiconductor stocks. RSI at over 82 on a daily time frame. MACD incredibly overbought, and it's pretty much hitting new all-time highs. So from a all-time high standpoint, it's at all-time highs, 78 RSI. Very strong support at 176, which is pretty much the next support, acting as a previous resistance here. And Qualcomm, stock like Qualcomm, it's very rare to see it be trading over 20 times earnings multiple. I remember when we analyzed it, it was trading in the mid-teens to somewhat high teens. So definitely we've seen a very significant growth in the overall valuation multiples for this company. 6 times sales, over 19 times earnings. Now, one could argue that these are not multiples that are crazy expensive, and I agree. However, if you are now over allocated on this stock, if you are looking at rebalancing or taking some profits off the table, considering how overbought this stock is and the huge rally that we've seen in overall semiconductor stocks, this is a stock or a company that you could consider sort of taking some profits off the table or even selling calls, because the premiums are good for Qualcomm. So if you come over to the options chain and just simply go over to Qualcomm, I was looking at this earlier, and go over to options here. We're looking at calls 1 month out, right? A little bit out of the money. So right now, of course, the price is at $212. Even if you look at 235 or through 230s, you're getting $1.70, $1 per share, per contract, excuse me. And 225, we're looking at $2.67 with a reasonably low delta. We're looking at less than 0.2. We're looking at $1.71, and that's 230. That's still further out of the money. $17 out of the money for Qualcomm. So this is a stock that has huge momentum, huge rallies, over 110% gain. This is going to be that next support level. I wouldn't be surprised if it cools off a little bit here. Already starting to see some selling pressure intraday. So wouldn't be surprised to see a bit of a pullback considering how incredibly overbought this stock is. So something to keep in mind, of course, for this one as well. if you of course owned it for a very long time. Even if you don't want to trim it or sell it, I would consider selling some calls against your shares a little bit out of the money to take advantage of this all-time high and the momentum that we're seeing for this company. So hope you all enjoyed this video and a quick overview of 3 stocks, 2 to potential buy or keep on your watch list as buying opportunities, and 1 to potentially trim or sell calls against to potentially hedge, considering how overbought it is. So let me know your thoughts down in the comment section below. What do you think about these 3 companies? As always, if you enjoyed it, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel and also take advantage of these deals. More importantly, the 51% off access to the MoneyVest platform, the beta access, it's going to be available for a very limited time, and then after that we're going to be doing a public launch hopefully by the end of this year, so that everyone in the world is going to be having access to the software and to the platform as well. So link's going to be down below if you want to join. As always, happy investing, and I'll see you all in the next video.